The stock market has been selling off and it might be the right time to start buying the dip. Now, everyone's been asking me, Antonio, you timed the exact bottom in 2022, posting a YouTube video. You timed the exact top of oil, Bitcoin, and all this long-term stuff. You bought HUD at $7, PLTR around $10. Can you please tell us what you're buying and what you're seeing in the markets? You guys know mostly I am a day trader, but made multiple seven figures long-term investing. And this is something I also teach to my students, so I wanted to make this video for you guys. Now, we are currently down about 4% from the all-time highs of the markets, but it's a really good time to start looking into what we can potentially buy, or just how should we long-term invest if we keep dropping and those opportunities start arriving. First, I want to talk about the logic behind when to enter into long-term positions, when to dollar cost average, and when to buy, so to say, the dip. Well, everybody's always asking when is the right time to buy the dip. For most, is we always wait for the perfect entry. I will tell you, there's never an exact perfect entry. You get close to it, you can get close to a really good entry. But if you're sitting on the sideline, always waiting for a perfect entry, you more than likely are always going to be sitting on the sidelines. You're not going to get an actual good entry. You're never going to get in. You're going to be filled FOMO. You're going to want to buy the top. So just understand that you're going into this with the mindset of not buying everything at once, rather dollar cost average, which means, hey, if I'm looking to invest $100,000 into certain stocks or assets, what I'm going to do is buy a little bit at opportune times that is best for me to then build up my position, rather than going all in at once. And this is where 90% of you guys get it wrong. You're like, I just want to go all in at once, and that really hurts you more than helps you in the long term. And remember, the dollar cost averaging also reduces the risk of volatility and the compound over time without guessing the market's next move. Now, you can have a good idea where the market is going, but you can't expect it to predict it one-to-one, know exactly where the top and the bottom is in. So we're going to go over some of my long-term investments throughout this video, so make sure you watch all of it, and I'll tell you guys also certain levels that I'm buying on those stocks, but I'll put it throughout the video, so make sure you watch everything. Don't be one of those guys that's like, hey, I'm only here to copy and follow. I actually learned this. Like, I've been day trading for 12 years, and even when I was a beginner, I was at no point just looking to copy people. I was looking to actually understand and learn. And if that's not your mindset, honestly, investing and just day trading, any of the things in there, crypto, stocks, is just not for you. You don't have the right mindset to actually make money. You're in it trying to get rich. You're gonna feel FOMO. You're just not gonna do well. If that's not you, make sure you stick around, watch the whole video, subscribe down below, because 90% of you guys that watch these videos are not subscribed. So if you want more of these videos, the best way to tell me is make sure you subscribe down below. Now, to understand the markets, we have to understand human emotions, and I always explain to my students this, that the market is simply human emotions repeating itself over and over again. Human emotions are predictable. Human emotions move in a cycle, and this is why the markets move in a cycle. So a lot of people, what they do is as soon as everybody starts spreading fear, we drop 5, 10, 15% from the markets, they get scared. They start panic selling. They don't want to buy in now. Before, they were praying for a dip, and they stopped. As soon as the dip comes, they get scared and they're not there. That fear turns into fuel. More people get more fearful. And the smart investors are there that are just following logic, not emotions, or taking advantage of it. Understand, most of the money I ever made has been taking advantage of logic versus just being scared and listening to the masses. If you listen to the masses, guys, more than likely you're not going to make money. Be a disciplined investor and do not be scared of volatility. It's price of the admission for long-term reward. So I want to show you a quick chart here on these 4 years of the S&P 500. This is a little bit bigger. So you can see in the last 4 years, count how many red years we had. We had 1, 2, 3, 4, 5, 6, 7. 6, 7. I didn't even realize that. So out of 33 years, green, 7 red. But what I want you to know is look at the red years. They tend to be bigger, not always, but they tend to be a pretty sizable amount. This tells you what bear markets or crashes are quick and painful, but they get bought up also very quickly. This means opportunities come in and out, and you have to not be fearful. You have to believe, that the top is not in, because the big mistake people make is like, oh, the top is in. You know how many? I've been in the market since 2014. However, the top is in every single year. Every single year, someone comes up with statistics with a data point on why the top should be in. And guess what? The top has not been in every single time. People have been saying the top is in since when the market opened, 1930s. Top is in every single year since the 1930s. So this is what's telling you that, hey, the market always goes up. The odds are always for the market to make a new all-time high. Every single time it's one. Every single time someone's bet, hey, this is the top, the all-time high is not coming, they were wrong. So let me tell you this. Do you want to hope for a miracle and think the top is in, or do you actually want to play for the odds that the odds have been 100% to 0 that the market always goes higher? To me, it's a no-brainer, right? And this chart really breaks it all down. Look at that. If you just close your eyes and you guessed, more than likely the year that you would invest it in would have been green regardless. Now, the principle of buying the dip and why it's so important, it's betting on right stocks and assets. Now, if you're buying a dip on a random penny stock that's hot, more than likely that dip probably wasn't good. More than likely, 90% of stocks over a long period of time get delisted from the S&P 500 and NASDAQ 100. So we have to focus when you're buying a dip, a big bulk of your investment portfolio needs to be in S&P 500, which is SPY, VOO, any of those, or the NASDAQ 100, which again is the triple Q, or any of those NASDAQ heavy assets. They always have recovered over time. We've seen crashes 2008. That's we all know about 2008, 2020, 2022, right? There's been so many. We always recovered. The tariffs recently, this April of 2025. If you bought that when I made a video telling you guys to buy those dips, we were up 60% just from those dips alone. And we always get enormous markets rebound when we get the best dips. But you do not buy blindly every dip. Be smart about when to buy it. Buy to differentiate between temporary pullbacks and structural declines. A disciplined investor looks for solid companies, strong balance sheets, and long-term growth catalysts. Guys, a strong balance sheet always carries really good, healthy companies, and the price will eventually always go where it's meant to be. We've seen companies like Apple, companies like Microsoft, Nvidia, Tesla, all those type of companies. Now, here's a quick chart on what we saw the last two major crashes. So 2008, 2020, look how quickly those got bought up. Maybe you had to wait 2008, a couple of years to be break even. But after that, you would have made a ton of money. And again, you're not buying the assumption that you bought exact top and you have to hold. More likely, you're buying through the downturn. And as you do that, you're slowly averaging down for your price to eventually rebound. Again, we got that during April of 2025. We got that during 2020 to a very extreme amount. Now I'm going to show you guys a really interesting stat that kind of defines the way I like to personally invest. The psychology of fear and greed. Fear and greed are short-term market movements. In the exact moment, in a day, in a week, anything can happen, right? Because we let emotions take over. But then the price always balances out. A really good example was during the tariffs. Everybody panicked, fear, we dumped, and within less than 2 months, we were right back to all-time highs from almost a 30% dip, which is completely insane. We had a single day in the NASDAQ that was up 16%, right? That was fear and greed playing to the markets and not being an emotionless, smart investor. The cost of timing the market. So this is where it gets really important on why we need to really minimize our fear especially and our greed especially. The cost of time, this is a chart of value of $10,000 invested between this January 2003 to December 2022. And then we can see what I have highlighted here is 7 of the 10 best days. We see it right here. You guys can see it right here. 7 of the best 10 days took place in the bear market. And if you had missed those, right? Look at where the 10K is at. If you had missed those, you've only have gained, right here, missing the 10 best days, you've only had made $30,000, which is still a really good investment return, right? It's about 300%, 10,000 to 30,000. But if you invested in all the days when the market really dipped, with those big minus 3% days, minus 4% days, where everybody's scared and wants to sit on the sidelines, they were scared of buying at those lows, you've missed out on nearly double, 2x from 65,000 to 30,000 being scared. And if you miss the best 20 days, and missing the best 20 days means you're not buying when the market is selling off the hardest, during those, you would have really have to gain. As you can see, you missed, if you got super unlucky, you would even have negative returns. This is what I'm trying to tell you is the best days happen shortly after the worst days. So you have to buy during the worst days into the markets to guarantee your returns to be the best they possibly can. You don't want to buy after the best days, because if you wait for after, like, hey, I want to wait here, the market goes up 15% before you know it, and then you start investing, you miss out on a lot of gains, but you want to buy near the close of the worst days. Simple rule that I also have, if you have a bigger budget to dollar cost, average more, so you have $100,000, you're going to split it more, anytime that the S&P, so the SPY, is down negative 1% on the day or more, 1% or more, I dollar cost average in the S&P 500. Now, this is a really simple thing that we can do to almost double our gains over the long period of time if we just simply do this. If you're someone that's like, hey, I'm investing every month anyway, I'm already investing, I do it on a Friday, on a random Friday, stop doing that. Because you will get these negative 1% or more days almost every single month, and they will beat all of these random buying the dip moments that you're doing. If you just simply do this, and it's a really simple thing that you can just change, anybody can change, go on and start doing that you'll see much better returns on your long-term portfolio. Now, two last quick points before we dive into some of the stocks and some of the charts that we'll go over in today. Dollar cost average, simply guys, set a fixed dollar amount. I'm gonna show you guys whether you're like, hey, I'm looking to invest $2,000 a month, or you're like, hey, I'm looking to invest a total amount, which could be 100K. Make sure you split this up and don't go all in once, guys. At no point in time I ever just gone all in. Now, there's times I buy more over dollar cost average. If we're down, if we're still getting down negative 10, negative 15%, I'm more aggressive now. So when I'm raking all-time highs and we just had a negative 2% days, I might just be buying a little bit. So you have to be smart with that, right? You have to understand when you want to be aggressive, when you start adding to your chips to the table, and when you want to take a step back and just slowly start buying. And remember that historic performance of dollar cost averaging has outperformed something crazy like 95% of hedge funds. You don't need to do this. To long-term invest, you don't need to pay anybody to do it. You need to go to a hedge fund. Do not please go to one of your Chase banks and start investing money there. It's literally the worst thing you can do. They're going to charge you high fees. You're barely going to make 4% return. If you just put everything in the SPY or the QQ, don't even look at it, just all at once, you're going to make better returns. So please don't make those two mistakes. Don't let anybody else tell you anything otherwise. This is why people are like, oh, can you invest money? I'm like, absolutely not. One, it's illegal. Two, I don't care. And three, you can do it very easily on your own based on just understanding a few things like you're learning in today's video. If you feel like you're learning a lot in this video, you want to learn even more and trade me every single day and learn all my secrets that I've developed over 12 years of trading into these markets, one of our probably most experienced traders on YouTube, Instagram, TikTok, anything that you want, maybe check out that link down in the description to join membership and join a bunch of students that are getting crazy results from all over the world. All right, now we're going to talk about the power of compounding. Even small contribution, guys, don't feel like this is where most people get it wrong. They're like, hey, I only have $500 a month. It's not worth it. Guys, what it also is worth it in building your long-term wealth. You have no idea how growth and exponentially you can compound these gains if you're following the strategy I'm teaching you, even if it's as small as $500, $300 a month. For this example, we're going to use an investment calculator to prove you guys how that growth really plays out. We'll do a starting amount of $10,000. Like, hey, Anthony, I want to start with $10,000. We'll start with that. And then we're going to add about 8% annual return rate, which is actually around 10% more. I'm deducting 2% for inflation, which a lot of people don't do, but we'll just throw it in there. And we'll do a contribute at the end of each month right here, $500. So we'll calculate and see how we do over 20 years. You're like, Antonio, I don't want to wait 20 years. Well, if you're 18, you're only going to be 38, and you're going to thank yourself for that. So you means if this was your numbers, you would have contributed a total of $120,000, but you would have gotten yourself an end balance of $331,000. You can see here, this long-term growth really adds up over time. Just to put it into perspective, if you start doing this when you're 18, 20, if you can do this young, by the time you're around 40, you can buy a GT3 RS, which mine was right around $300 and so $1,000 with as little as $120,000. Hey, if that's what you want to do, right? You invested $120,000 and you got a 3 RS by the end of it. It's not bad. But now you can be more aggressive. It's in, Tonio, I'm trying to save everything. I want to get this even faster. I can do 15 years for $1,500 a month, which I know it's not easy. If you invest an extra $1,500 a month, I totally get that. But this is why you're looking for side hustles. You're looking to day trade. You can take that active income and start adding into long-term portfolio. If you calculate that, look how crazy this really gets. You would have done a total contribution of $270,000, and you would have $550,000. That means by the time you're 35, let's say you start this at 20, by the time you're 35, you can buy a house in cash essentially, or you can split that $538,000 by 10 investment properties, 8 investment properties. But you can see how this gets really good, really fast. And until you're like, hey, I don't want to wait till I'm 35 to have a lot of money. Guys, 35 is the new 20. So you're going to be chilling and it's a really good, you kind of sign yourself up. So, I know it's not cool to talk about this stuff. It's not fun. You guys prefer when I'm driving in a car and flexing shit. But this is really where the real wealth is at. It's actually how I got into trading. Because with things like this, I was thinking long term. Again, it's boring, but we still have to be smart about it. All right, now we're going to start talking a little bit. I know this is why you guys are here, bro. I know why you guys are here. You're like, Antonio, I want to tell me the stocks that you're interested in buying. Of course, not a surprise. Core ETFs. So I'm going to be buying SPY QQQ, VOO. I'm going to replace the SPY with the VOO. Some mega cap techs, which you just have to do, which are going to be Microsoft, Apple, Nvidia, Meta, Netflix, and Tesla. Guys, I will be buying other things apart from this, but I don't want to make this video 10 hours long. I will be buying other stuff as well. Some semiconductors, which I think are always the future, especially with AI, guys. With AI, semiconductors always going to be the future. AMD, STM, speculative and growth. These I'm a lot more particular on, but Hood, PLTR, and a really hot one right now, XPEV. So I'll chatter on Twitter about it. I don't want to miss that. Precious metal, silver, and I don't know why gold is not here, but gold and silver are at a solid point to start buying. And you do always want to hold some cash, guys. Look at this. If you invest $2,000 a month, your allocation should look something like this. You could drop 10% from here and then do this 30% and add another 10% of other. Other can be other things you like. It could be something safe, Coca-Cola, Costco, McDonald's. It can be something, hey, I'm going to be aggressive. Some other stocks that you really believe in and you did some research on. All power to you. But now we're going to go quickly through some of these stocks and where I will be buying them. All right, here we have everybody's favorite, the triple Q. As you can see, we got a nice little sell-off. Now, I'm not lying to you guys and tell you, hey, this is some insane sell-off. There is some huge, massive opportunities out here. This is not a massive opportunity. This is not a 2020 opportunity. This is not an April 2025 opportunity where I was like, hey, throw a bunch of money in. But is this a decent little opportunity to start kind of messing around with it, especially if you have nothing invested at all? Yes, it is. But if we look from the highs, we went as low as about a 6% drop. Unfortunately, and I say unfortunately because guys, I like the market to drop because I can buy better prices. I don't want this to go up. So I say unfortunate because you gave me a 20-30% dump. Then you put a few $1 million in there and let me make a big bag. But again, we're only negative 4%, guys. This is a very healthy, normal correction. We're talking about a real correction, a bear market, and negative 10% or more, which again, we're far away from it. But starting a dollar cost average a little bit here is not a bad idea. Now, my target where I would like to really get a nice dollar cost average would be right at this low right here, which is 581.62. This is from that dump earlier in October, so last month. But now I want to show you something that I like to do with moving average. Simple moving average. Where is the simple moving average? Simple moving averages. All right, simple moving averages here, and I'm gonna change this. There's a bunch here. I'm gonna quickly change the settings. I don't know why is there so many. Why is there so many? Why? Okay. The only one we're gonna need is the 50. And I believe I left the 50 on. I don't know why there's so many here, but yep. Okay, the 50, guys. I have one more here, unfortunately, but I forgot about it. Doesn't matter. Guys, on the daily time frame, my first always buy on a dollar cost average is on QQ and SPI is the 50 SMA. Anytime, and you guys are like, oh, Antonio, SMAs, they work well on long-term invest really, really well. You can see that on the daily chart, look at every bottom that we essentially have gotten this whole bull run. This is the first area I'm always dollar cost averaging into, and you can do this really easily. You right-click your SMA, right, and you can add an alert. You can add an alert when this crosses, touches less than. You can send an alert and it triggers for you. You get on your phone, hey, we just touched it. Let me throw in some money in there. This tends to be a really good DCA, especially during a bull market. Because this is a bull market, right? And you're like, if you're just waiting and waiting, you might not get any buys at all. But I only DCA in a bull market when we retrace to the 50 SMA because it's not going to be a crash, but also I'm not buying the top here. I'm not buying the top right here, right? I'm getting really solid buys in through a bull market without actually missing the bull market. So this is really, really important. You can use it on QQ. You can do this on the SPY as well. You can see on the SPY almost identical. The SPY, very similar to what I just told you on QQ. My next buy is going to be right here at this low, which will be 652.86. Under that will be this next lows at 632.99. And honestly, if we get lower than that, you're probably going to get an updated video anyway, so you're going to have to watch that. QQ, of course, this will be right here, 559 for that buy. If we keep selling, we have this 559.37 area right there. Okay, I'm going to try to move pretty quick through this because it is a lot. Microsoft, another one that's at a pretty solid spot to buy. We got this area of support at 492.67 right here. Now, with stocks, I'm a lot less aggressive when I'm buying it, and it's down about 11% for all-time highs, which is technically entering a small bear market. Now, with Microsoft, I'll tell you, I don't love much of it until this massive gap at 420, which could come drop. But now, I don't want to wait till then because this is a big price difference. So what I will do is I will flip out the top and the bottom of this leg, and I will look to buy more around 449 first. If I want to be really aggressive, I could get some 460s in there, but I'll probably be looking all the way. Again, I'm not as aggressive with individual stocks because I know they're more than likely, if the market is coming down, they're going to come down a lot faster and a lot harder. So I don't need to be as aggressive during those buys. So I'm going to be looking at the halfway point of this whole strong move up, and then after that into this gap, and then after that again, you're probably going to get an updated video if it comes down to like 340 or something crazy. Now, Apple, it's just been really, really strong through this bull market. As you guys can see, it's literally sitting all-time highs. Apple has not had any pullback, so I have not bought any Apple. The first pullback I would like on Apple would be a buy at 250. After 250, I will be waiting for 235, and after 235, I'll be waiting to 215. If I'm going fast, make sure you pause it, you rewatch it, save the video for later, write them down, and then go buy them and set alerts at those price levels. On Trivia, guys, all you gotta do is right-click. Or with the price level you want, you can add an alert and you can get alerted. Make this easy and don't be lazy. Now, NVIDIA, hot stock. It's been going up a ton. And since it has been going up a ton over the last few years, again, it's probably not the hottest stocks of the last 2-3 years, I want to say. Some of the buys that I'm looking for, honestly, for you guys, I've not bought any NVIDIA. I'll be waiting for a pullback right here on 163. As you can see, the market lost the cap previous rest in liquidity like it does here, and then bounce up. So 163.84, which again is not an insane move down. After that, I'll be looking probably right here at 147.89. After that, I'll be looking to this gap at 118, wrong tool, 118, and then after that, probably I will wait all the way to $74. Again, also the more I'll get more aggressive. So like this first buy would be like a small buy, like I'll buy a little bit. But then we start coming down here, I'm betting a lot heavier. So the worse the price gets, the more you want to bet on that investment. So I hope that made sense. Meta is a lot more interesting because it's at a decent chunk of a sell-off. I really like where it's at right now, 620, 617. We had this gap right here. Get a little buy in there. Under that, I'm going to be looking for this equal lower all the way down to 476. And then after that, I'll probably be waiting all the way back to this previous all-time highs here from 2021. Yep, right there at 370, What is this? Yeah, right around 370. So this will be my 3 buys on Meta. Then we move on to Netflix. Netflix, again, another one that I'm not loving it as much. I really would like to wait all the way down to 822 for Netflix. That's me. I'm not a huge Netflix lover. But 822 is definitely something I'll be really, really interested in. And even here, honestly, 1060, 1073, this is a pretty decent buying spot. But for me, I'm probably going to wait here. But if you really like Netflix, you could buy a little bit more aggressively up here. I'm probably going to wait all the way to 820.50 before getting any buys in. And then under that, probably somewhere in the $700 and $600 areas. Now, we'll skip a little bit of the safe stocks and we'll jump into the hot ones, which is Hood, PLTR. So with Hood, actually, I already have it drawn out with you for buy around 106. Again, these have gone up a ton, which means if a stock has gone up a ton, I'm not looking to be very aggressive with it. I'm waiting for nice, good pullbacks. I'm going to wait for 107. Under that, I'm going to wait for 85. Under that, I'm going to wait for 63. And then under that, probably all the way down here to around $30. This is where I'm looking at for Hood. Everybody's begging me for PLTR. Antonio, you knew PLTR was going to long from when you bought them. You literally bought it at $6, $7. Like, how'd you know? How are you up over 2,000% on this stock? Yeah, there's a reason. There's a reason for it. Again, this is going to up insane amount, guys. I'm not looking to buy too much into PLTR. Unless we get to 160, it will be a pretty decent first buy. And honestly, under that, we went all the way to 126. We saw Michael Burry come on. He's in a heavy short on PLTR. Now, you guys are going to be scared. Like, oh my God, Michael Burry. Guys, Michael Burry has been wrong way more times than right. Understand that he was right once, and he was really, really right, which was that 2008 crash. But apart from that, he's been a miss everywhere else. So don't just, like, because you see in the news Michael Burry and he had a movie about him, he's generally not that good. Like, yeah, he was right once and he hit for an insane amount. It's like somebody hitting for $1 million jackpot once at the casino, but every other day they're losing $1,000. Now, again, he's way richer than me, so I probably shouldn't say that. But don't be scared just because he said that. He's been saying the market has been crashing since 2020. So ignore that. Now, XPEV, it's a stock that's really, really hot currently. People are being lazy against the stock. I know really well. I had made a video on this back in 2020 around here. As you guys can see, the last, especially since 2004, this company has turned a profit. You can see here the earnings. They're doing really good. What I really like about them, they make really good cars. What really hurts them is they cannot sell those cars in America. And honestly, I'll be straight up with you guys. A company will not blow up unless they do really well in America. I'm sorry, it just cannot happen. And as long as there's bans on Chinese cars in America, this stock will never fulfill its potential, which could be in the hundreds, if not even to the thousands of dollars per share. But now, it does have a lot of hype behind it. Do I want to miss the hype if I can take a small risk on this? No. So I did buy some around this $22 mark end of the day, Friday. I will buy a little bit more if it comes down all the way to $14, $15. And again, probably if it comes down to like an all-time low around $6, that could be a potential buy as well. I really wouldn't want to see this. What I really want to see this now, really just break above this. You see here we have all this resistance sitting right here. I honestly would just like this is consolidating really nicely right under it, break out and start, coming up here. Now again, I have also some price targets. I have certain areas that you're happy when you're buying certain stocks. Now, last one about when it comes down to this growth is Coin. Again, Coin was another one, guys, that I was buying here. All in here, we were all over Coin, hundreds of percents on Coin. Now, you see crypto is been pulling back. I'm looking for 235 for a buy. I'm looking for 156 for a buy, and under that, probably around $100, if not sub $100. Coin is really solid because if crypto is doing well, Coin is going to crush it, and they're pretty much the most used platform in America. Very similar on Robinhood, but for crypto. Now, Robinhood has been crushing it too. They do crypto, they do futures. They just developed so much from what they started off with, which was pretty much like a cheap way to invest for teenagers on an app. Now, we'll talk about a little bit about gold and a little bit about gold. Sorry, this is not what I want to see. We'll go to XAU USD. Gold is an interesting one. Because you can invest in it in many different ways. Go off the XAU USD chart and then invest it, whether it's a GLD, which is an ETF on gold, or any buy physical gold. It doesn't really matter. A lot of you guys are looking at this, but I'll be honest with you, I'm not buying gold. I'm not buying gold until we come back to 3,400. Until we come back here, I'm not buying gold. I'm just not, guys. You have to understand. I told you guys to buy gold here, all here. I made 4 or 5 videos on my other YouTube channel all about gold, buying here and saying this should go up to at least 3,000. Long-term investing, you can't fall in love with the moment. You have to understand this will come back down. At some point, this will, I guarantee you, will come back down. But if you rush and you're not waiting for the perfect moment, you're going to get crushed. Then we'll go with silver. We'll just do the ETF of silver. Silver, again, another one. I was begging people to buy around $18, which is working optimized. We're getting a pullback. Silver, I think, does have a bit of a more potential than gold. I would be buying around $39, and below that, I will be buying around $30 right here. Remember, gold and silver are very volatile, so even though it looks like a pretty big move, this can quickly come all the way down to give you some of those dip buys. And then I think that is all that I covered. If you have certain stocks that you're buying, I want to know them in the comments down below. So leave them in the comments, what you're buying, levels you're buying. Maybe, I'll buy some. Maybe I'll follow along. I'll follow your signal in the comments. If you enjoy videos like this, investment videos, hope you appreciate it. They do take a lot of time and research for me to do. So leave a like, comment, subscribe. Follow me on the other socials. And if you do enjoy my mentorship, that link will be down below. But as always, I'll see you guys in the next video.